Are you in charge of your finances 100%? Do you have someone in your life that you totally trust that is a financial expert? Well, lucky for me, I am also a foodie. And this man right here, Doug Clancy with Cornerstone Wealth and Tax Advisory Group, he does dinners. And I came for the food, I admit. And we've gotten to know each other fairly well the past couple of years, and I wanted to sit down and chat with him and just learn more about Doug and share how lucky I am to have met you.
Well, thank you. I'm lucky to have met you and all our great clients. It's always an honor to be able to help people and guide them in their retirement. And it's really, really important for me, to be different than everyone else. When I got in the business, that was my goal, to just be different.
You definitely are.
Yes, yes.
Well, I have a few questions I wanted to ask you, if you don't mind.
No, I'd love it.
And
Thanks.
I thought, since I met you through your career, and I've learned a little bit about your background. Let's talk about that. And you used to be a computer engineer and a math teacher, so you know numbers, obviously. Yeah. And now you're a financial advisor. So tell me, when was the moment or that realization that prompted you to switch careers back in the 90s?
Yeah, so what I did was I had actually thought for sure I was going to be a math teacher. I always loved math. I stayed after school, got extra help, and just enjoyed math. So then I thought, for sure I'll be a math teacher. Why? I wanted summers off. But as I went to school, I got recruited out of school from a company called McNeil Engineering. And the deal was, look, you've started school, and if you come work for us, we'll pick up after you work for us for 1 year. We'll pay for your college. So I go to my mentor, my dad, get a little bit of advice, and he's like, son, that sounds pretty good. So I started working for them. Literally, I knew right away, literally within the first week, this isn't for me.
Oh.
Yeah, it was tough because
no.
I put all that time in, got recruited. They really gave me a good offer. So I spoke with my dad again, and I said, boy, Dad, I just don't like this. Again, he gave me great advice. He said, look, you worked really, really hard. It's right in front of you. Great company hired you. Because why don't you give it some time? And we discussed it. And I decided to give it 1 year. And I did. And I still knew I hated it. But on the 1 day anniversary, I went to the president of the company and I said, Jeff, I'm sorry, but it's time for me to go. I have other things to do. And I left that. Honest to God, didn't know 100% what I was going to do, but as life works out, the timing was perfect. I went and had lunch with my sister who was working for a company, and it's in New Hampshire where I was originally from, and I started working with that company in the insurance financial world. And I was blessed because the company I worked for, a guy named Joe V, I'll call him, was a mentor of mine and my boss, really, and fantastic, taught you do everything the right way, be transparent, listen to people. And so I had great mentors in my life, and I've just taken that and ran with it. And it's been the best decision I've made in my life.
Nice. So did you just hint to me that you're a Yankee?
Yes, I'm a Yankee, but not a Yankee fan. I'm a Red Sox fan.
Okay. I felt a hint of that New Hampshire accent because I used to go, I was really lucky growing up on the East Coast. We had to go to Vermont skiing all the time.
Oh, boy, nice.
But yeah, I had to go back to New Hampshire. I went
Beautiful.
there this summer, Lake Winnipesaukee.
Oh, I spent a lot of time on Lake Winnipesaukee. A lot of fun.
Nice place. So I see that you wrote a book, and I have it right here, Protection with Power. Let's talk about a little bit the key misconceptions that people have about annuities and just general retirement planning. There's a lot of misconceptions.
There is, and that's what drove me to write the book. As I talk to clients and meet new people, I would feel what they were told, it wasn't a lie, but it wasn't exactly truthful and it wasn't direct. So literally, I started writing of some of the things that popped up. I started writing about it, and I wanted to write a book to give to my clients only. Well, I wrote the book, and I'm really good at math. I'm terrible at spelling. So when I wrote, I wrote the book, but I didn't want to come off as a moron. So I sent it to a gentleman, a company really, and for, I think it was like $1,500, they completely did the edit, make sure the spell check, punctuation, all. They're reading the book while they're doing this, and this is what they did. They called me all of a sudden and said, hey, we took your book and we sent it to New York to Morgan James Publishing. We think they should publish it. It's a great book. So Morgan James called me and they said, hey, we'd like to publish your book. And I'm like, I didn't know what that meant. I'm like, oh, really? So he starts telling me, David Hancock, he's the owner. He starts telling me we're going to have it in all the Barnes and Nobles throughout the country. We'll sell it online, all that. And I'm like, well, that's great, but I thought, how much is this going to cost me? I go, I just paid $1,500 for a book I'm just giving to my clients. So he paused and he goes, no, Doug, we want to publish your book. We want to basically have your book and we'll publish it and we'll be paying you. And I started to, this is negotiation. So long story short, I didn't know when you publish your own book, you actually have to buy it. And I didn't want that because I wanted to be able to hand it to clients and people that could use it. Even people that just don't, a lot of people they have credit card debt, things like that. I want to help them too. And so this book can help get people's mind in the financial world. And so long story short is I get so many free books each year. Well, they're not free, but they're pennies on the dollar, and I can give them out. And but a lot of people have bought it and have complimented me. So I wrote it just for clients, but now I get to enjoy it with more.
That's nice. Well, and can you go a little bit deeper with the misconceptions though that people have?
Yeah, absolutely. You mentioned annuities, right? Because I do annuities, but I'm also a full active manager in the market as well. But when it comes to annuities, what I see mostly it's not lies. It's just not as transparent, leaving things out. And the people that offer the plans, many times it's almost a side business. Oh, if you don't want to put your money in the stock market and take risk with it and pay us fees, well, then we'll offer you this on the side. I don't do that. For me, an annuity is a big part of my whole portfolio planning. I always say for the right annuity, it's for my lifetime money, the money you want to keep forever. Now, there are bells and whistles and all that and riders and all that, and that's what the transparency is. I use a board in my office where I can write things down. You hand people information. You don't just give them a brochure that has a husband and wife walking down the beach. Yeah, that's pretty, but it doesn't tell you anything. I like the meat and potatoes of real information. And if you have that, you're not going to make a mistake. So with annuities, there's a reason you're getting the annuity. Is it you just want growth and safety? Do you want income? Do you want to leave a legacy? Unfortunately, too many plans or too many advisors are just offering a plan that maybe the company has a special going on. Maybe they have an incentive for the advisor, something like that, and they jump on the bandwagon. I don't look at any of that garbage. I don't care. I don't want their little gifts. I don't want it. I want you to offer me a good plan that I can explain to my client and never have a complaint. That's what I want. And I want them to be happy. And we've been very successful with that. Knock on press board.
And have you been doing it since the 90s?
So 96 is when I started in the business. I worked for that captive agency for 6 years. The reason I left was it was a great company. I said I had a great boss, but I could only offer what they were offering. And it didn't take long to realize, well, I'm supposed to offer you this, but gosh, now I know I would get this. So I started literally saying to somebody else, like, oh, this client, so can you go see him? And I said, why am I doing that? I'll just do it on my own. And that's when I broke off on my own. And around 2002, went 100% independent. I'm not handcuffed. That means my clients are not handcuffed. Yeah. And I can give them what they need and what they want and what they can understand.
Yeah. Well, just answering that, I can really feel your passion.
Yeah, I do have a little bit of passion, that's for sure.
You definitely like what you do. So I have a question. You might have mentioned it. Your certifications, the CFRC Series 65, that influenced the way you advise your clients on these annuities and having a secure income. And how they influenced you?
Yeah, so there's two different ways of doing the business, and a lot of people kind of mix this up. So there's a fiduciary standard when we're managing people's money in the stock market, okay? And the last administration tried to take a pen and just say, okay, everybody's a fiduciary. I didn't care for that at all because the test I took, when I took the test and hit and it showed pass, I went bananas. I was so excited because it said only 28% of the people that take this test will ever pass it. You got to know A to Z. So when I passed it, I was great. Now I'm a fiduciary. I've proven I know what I'm talking about. And then an administration comes in and says, hey, everybody's a fiduciary. Well, that didn't really fly, but there are people today calling themselves fiduciaries. They're not really fiduciaries, right? So, if you're managing somebody's market money, you're either a broker, meaning you're working under somebody. They're pretty much saying, here's your little pie chart. You can offer this, this, or this. I don't really think that's managing somebody's money. For us, we're actively managing it. And I call that red money, red line money, if you will. It can go up, it can go down, and there's fees. But then there's the annuities, and that's not a fiduciary. You're not a fiduciary offering the annuities. It's a best interest contract. So the people that are saying, hey, I'm offering annuities as a fiduciary, that's just not accurate. You're a fiduciary for the money you're managing the stock market. But when it comes to a safe, fixed indexed or fixed annuity, you have a best interest. So the best interest of the client is what you're supposed to do.
Right.
So, but there are enough regulations, enough checks and balances that, people are getting a lot more of what they know they're getting, but I still see those gaps, and I'm just going to keep pushing transparency, and asking questions. I love my clients. We have a lot of clients. We have more than most, and we manage them really, really good. And I get this a lot. Doug, I hate to bother you. I know you're really busy. And I'm like, no, this is what I'm here for. I have a cell phone. You need to call me. I don't care if it's a Saturday. Your question on a Saturday doesn't go away in your head. And I'd rather you call me for a minute. We talk, and now you're good, and you'll sleep well. When people are sitting in front of me and I promise them I'm going to look out for you, I actually mean it. And so I'm just going to do that. So I try to make myself available. And again, just, not being afraid to write things down, and emails, right? I do emails. They say, a lot of advisors won't send emails, and they come out with every bogus excuse. I'm like, look at the E in email stands for what? Evidence.
True.
You have nothing to hide.
You're talking my language, because as a realtor, I have a fiduciary duty to do work for my client in the best interest. And I can't imagine just saying, oh no, you don't want this house because it's less expensive, because I want a higher commission. Like that's just bizarre to me.
Right.
My job is just to find them a house, no matter what all the terms are, and it gets exhausting because the government's got involved, but that's a whole nother story. But
well, you've been absolutely great. And I refer clients to you. You do a wonderful job. Everybody's happy. So including me. So thank you.
Thank you. Well, I feel like you just went through your whole work ethic right there, and you talked about how you really pride yourself on transparency. You answered that question, and then you're the sole owner of this whole group here. What's been your proudest milestone since you launched?
Well, first of all, I like being the sole owner. I don't need to have 2 people, 3 people. Every time you see that, there's problems, right? At some point, the beginning and ending. So I just figured, you know what? I know what I'm doing. I know what I want to accomplish. I'll do that. But it's super important. I have an incredible team, and I'm very generous to my team. I'm generous to clients, but also our employees. They're well taken care of, because they should. I look at it, if it's me and I'm on that side of the table, how do I want to be treated? So we have people that stick around with us. So that really, really helps quite a bit. My biggest accomplishment is not having any complaints. I'm not saying I'm not saying a T hasn't been crossed or an I, and we can fix anything we can fix, right? Yeah. But I'm talking about a blatant out, man, we're mad. This is not what you said, that type of thing. I've never had that, going on 30 years in the business,
That's pretty good.
So I'm really proud of that. That's what I want. I want people to be happy, and they are, as long as you're transparent with them.
Yeah. You reminded me, I have to write you a Google review.
Oh, thank you.
No, this is how I met you. Let's talk about client education a little bit. You've hosted seminars and webinars that have been attended by over 25,000 people, and I'm assuming they're predominantly from Placer County.
Yes.
What are the most common questions that you encounter around annuities? I mean, for me, I just didn't even know what they were. And you're right, I did discover them as like a sideline that previous financial planners mentioned, and they weren't that big on it, so I ignored it.
Yeah, they do. Well, listen, I mean, I can make more money managing somebody's money in the stock market. And I'm part of that industry. It's a part of a need and a portfolio. But gosh, right. Don't you love the people that say, hey, your money's in the market. The better you do, the better we'll do, blah, blah. But they never say, well, if the market goes down, you're not doing well, but we're still going to get paid. Albeit they get less, right? That's what they mean by if you do better, your account goes up, we make more money. But I like both sides of it. If you're going to say that, you're right. But say the other part. The truth of it is, if the market goes down, you lose 20%, we're still going to get paid. We're still going to work for you. We're still going to work hard. But they don't do that, And so I come back to that word transparency quite a bit. I think that's important. And not having a complaint, you can do it. You just have to be there for your client. And I just had a client call this morning. We met yesterday. And she called, and her discussion was, I went over this stuff, and she goes, she said, I just heard what you said and whatnot, but I didn't sleep well, is what she said. Right away, she said, but I'm okay. She acted like, I'm okay, don't worry about it, Doug. I answered one question for her, but I could tell. So I said to her, no, let's set up an appointment. She's going to come in, and once we're together and when she can see things in red, that's what's important to me. My time, oh, you're busy? No, my time is for you. Too many advisors aren't doing that. They want to be out by 3:00 on the golf course. And listen, this is a full-time position. It's not for the part-time people.
No, I know. Same with real estate. Yeah.
Right?
You got to be there all the time.
Right? Saturdays, even Sundays. I'm grateful. I don't have little kids, I say, too, so that helps me.
Does your son, he helps you out here too, doesn't he?
No, so my son is in a different career path. We talked about it. We flirted with it. I have the ability, I can get in front of 1,000 people and speak to them. He's really a smart guy, but he's more behind the scenes type
introverted.
of guy. Yeah, he is a bit, but super, super smart. Great. I'm so proud of him, but we're not working together. He's got his career and I got mine.
That's awesome.
Yeah,
that's good. You got to let them do what they want to do.
Oh, yeah.
Okay, so let's talk about annuities for today's retiree. Yeah. It's funny because I was just reading about in the 40s, people didn't retire, and it was mostly men that were working, and they just worked until they died. Yeah. There was no retirement planning. So you wouldn't have had this career back in the 40s.
Right. That's true.
But so with low interest rates and market uncertainty, how do you position them in a balanced retirement portfolio? I mean,
good point. Yeah.
Yeah, that's one thing that I struggled with too. I mean, one thing I know is I'm protected from someone like Bernie Madoff, right?
Yes, that's right. That's right. Boy, what a name, huh? Bernie Madoff. He made off with your money. It's like the writing's on the wall. Hello.
I didn't even think of that.
Clancy. But anyway, on a serious note, when it comes to the rates right now, right? We had an incredible low rate environment. Then we shot up because of inflation. Right now, there have been some really great opportunities, what we call even upgrade opportunities. Think about this. You have a mortgage and the rates go down. And what do? You refinance. So sometimes we can do that with an annuity, right?
Yeah.
But the bottom line with an annuity, it's really important of why are you getting it? Is it legacy? Is it income? Is it growth? Now, some plans will even allow you to have all three. But the honest conversation is, if you went to a plan that was just for legacy, it's going to be a higher amount than if you're going for a plan that has legacy, also good for income and also good for growth. Each one of those will take a little bit of a haircut to give you the benefit of the others. People don't want to have that conversation, or they don't know how to, but I do it every day. And that I find helps clients. So it's my way of coming across to my clients. The reason why people are confused about annuities is because what are people trying to do? In their mind, they might not even be big on the annuity because they're into the market, and that's where they're making their money, right?
Right.
And so it's hard to step back and say, what is really best for you, and take your own self out of it. And I think I do a really good job with that. There are some people that shouldn't have an annuity. Some people I meet have too many annuities. There's a balance to
Not
everything,
enough and too
right?
many.
Yeah, there's
Yeah.
a rule of 100, a basic guideline. You take 100, you minus your age. So if you're 70 years old, you take 100 minus 70, it leaves 30. That's where the so-called experts say you should not risk more than 30% of your money. Now, that's a guideline. What I've seen lately, because the market's been on fire so long, money managers are in competition with each other. So if this one's doing this and this one's not, well, I'm going to get a little more aggressive. Well, now I'm going to get more aggressive. I'm seeing some seriously aggressive portfolios for people that are over 50 years old, coming up on retirement or retired. Right now, it's looking good when things are good. But when things go, they are the people that you heard in 2000, 2008. Oh my gosh, my 401k, it was wonderful. It was great. Now it's a 201k, and I'm almost starting again. Are we going to do this again and again, because things go in cycles. So I believe have the money you need for lifetime and safe,
right,
and the money that you can, afford to take a chance with at risk. Yes.
Yeah.
So I get a little bit. You can tell.
I know. Good answer. So let's talk about products a little bit. Do you typically recommend the fixed, indexed, or immediate annuities? We didn't get into that nitty gritty a little bit. And then what factors drive you to recommend that?
Yep, this is another thing that helps people be confused about annuities, and I believe it's on purpose. And so when people start spouting out, so you mentioned different kind of annuities, fixed, index. There's variable annuities. You mentioned immediate annuities. They're all different, right? Yeah. So I don't like variable annuities at all. I don't see many anymore, but they're what I call a red line investment. They can go up, but they can go down. But the fees are absolutely insane. Now, what was happening back in 2000 and 2008 as the market was going down, and you call up your broker, hey, Sal, the broker, hey, listen, I'm over here, and all I have is all I'm ever going to have, and I'm losing money, doesn't feel good. I don't want to come on in. And what they did, I'm going to put you in this variable annuity. And they would add a rider to it that would have a certain, say, 5% guarantee. The misconception was that you're really going to earn that 5%. All the while your actual cash values, and then the market goes down. So they moved you from the market where you were worried about losing money and put you in a variable annuity where you can lose money and they get a commission. I don't like variable annuities. They're just not my thing. An immediate annuity, I'm not a fan of. Immediate annuity is kind of, people take that if they win the lottery. You don't want the big lump sum. You'll take a lifetime income, right? Well, if you win 300 million, that's a good income, right? But immediate income, you got to be careful, because if you all of a sudden set that up, you can't reverse it. So there are income products now that you can turn on and you can turn off. Oh. So I stay away from those immediate annuities myself, stay away from the variable annuities. I like the fixed index. There are probably 50 companies that offer them, probably 300 different plans. But again, they all have different reasons. So having a conversation with a client will guide us to the right plan, and they'll never be unhappy if they're in the right plan. There's also what's called a fixed annuity. Well, it's a multi-year guaranteed annuity. And this is the basic annuity. And what it did was, it's kind of like a bank CD, right? You might have one that's a multi-year guarantee, 5 years. And for that 5 years, it's paying you a certain percentage. Each year, you can typically take out 10% out of certain annuities. And that's a really nice solid, because it's always typically higher than a bank too. So those are the different options. The fixed index is 100% safe. The fixed index is safe. The variable annuity and the immediate annuity is safe and guaranteed you get that money, but I just think you can do better elsewhere.
That's an excellent explanation. I totally got it now.
Good,
I know what I have.
Good, right?
Okay, so how about taxes and legacy planning? Like for me, I don't have kids. But I do have family. Like if we have a trust that we put together, mainly because we have animals, horses, that we don't want them to be separated and end up in a slaughter or something awful like that. So I have that all planned out, and I have serious peace of mind because of that. But and back to taxes and legacies. How can the annuities help manage the required minimum distributions? And I guess they're called RMDs, which I didn't know what that was before, and plan for their estate. Yeah, so RMDs, people have misconceptions on that because the ages have changed. So 70 and a half, then it went to 72, now it's 73. Ah,
So it's at 73, and it's the year you turn 73. In that
okay.
year, you're supposed to do an RMD. That's called a required minimum distribution. And so there's a table chart basically, and it's a mathematical formula. You take your December 31st statement of basically at the end of being 72, the year you're 72, whatever that is, you're going to divide it by a divider that's a chart, if you will. I have a chart. And basically, so let's say you're 73. Just off the top of my head, if we did the formula and it comes out to say about a little over 4%, say 4.5%. If you have $1 million in your IRA, you have to take out roughly about $45,000 and pay taxes on that. If you don't take it out, there's a 25% penalty. And then they have you take it out anyway. So at Cornerstone, we make sure that every one of our RMDs are covered each year. With knock on wood, we haven't missed one, but it's super important because that penalty is so high.
Yeah.
So the thing is, there are annuities that offer income that you can't outlive, and it can give it to you every year. And a lot of people use that because you don't have to, let's say you have 5 IRAs. You don't have to take the required minimum distribution out of all 5. You can literally take it from one,
Yeah.
and it covers all of them. So a lot of people use an income annuity that we put together, and it's going to generate enough to cover all your RMDs. And then you're never missing it. You're never getting in trouble. And yes, you have to pay tax on it. And no, there's really no way around it. That's a big question.
Well, all I'm thinking about here, Doug, is when I'm 73, we're the same age. Are you going to be working and helping me?
Good point. People ask me that, so next week's my birthday, Tuesday, I'll be 60 years old. And people ask, when are you going to retire? Thank you. Look, you see what I'm doing right now, talking and sitting. There are so many people that work so hard. God bless them. They should retire, My body's good. I'm good. My mind's good. My friend, he's also a mentor of mine. He's 82, going to be 83. He's still in the business. Now, he's got people that work with him and all that. And same with me. Although my son's not with the business, Andrew, who's been, he's my son's age, and I've known him. He's been working for me, I think, 14, 15 years. But he's become family. At my house, him and his wife have a room. They they got their own bathroom.
So you have a multi-gen home.
Yeah. He's a real smart guy, ethical, and he was what I saw early, and I've helped mentor him. And so if God forbid anything happens to me, we have a contingency plan where he would jump in. Everything, our teams together, we're a corporation, so it'd still run. But I don't plan on retiring. I really think I'll just keep going. At some point, I probably won't do as many of the public events I do.
What?
But I'm ready. I'm still ready to go. I'd go do one right now. So I got a long ways to go.
I'd love to eat tons of Brazilian food in my 70s.
Right. Well, one day I eat well. Yeah, I don't miss meals. I like to eat.
Same here.
And I'm a good negotiator, so sometimes these restaurants we go to, and it looks like it might be a little more than it is, but I'm really good negotiator,
Yeah.
As long as it's a win-win, everybody, even in business, right? The companies have to win. The advisor has to win, but the customer has to win. Too many times I see where the company wins or the advisor wins, and who's losing? The client. There are even some companies where they're, like, say their solvency rating, their numbers. I look at them and I know what's going to happen. Maybe today it looks good, but I know something's coming down. I stay away from them because what are they going to do, right? You got everybody winning, and now there's a problem. Who are they going to take from?
Right.
They're not taking from them. The advisor, oh my God, don't take from them. He'll cry and say, oh, I'm not making enough. They'll take it from the client. And I think that's bogus. Most of the plans I offer actually pay the least. You know why? The ones that pay the highest are trying to give you extra benefits that they think might sell them. You know what I mean? But the B-rated companies, listen, B-rated, you look at the chart, they seem strong and whatnot. I just don't want to offer B-rated companies. I'd rather just be A. Just don't mess around. Just boom, have no problems is my way of thinking.
Yeah, keep it simple.
Keep it simple.
And forward focus on the customer, just like you said.
Absolutely.
That's why you get 5-star reviews.
Yeah, well, when I wrote the book, that's what it was. As a computer engineers, we can make things complicated. Gosh, before I would go buy a car, I used to have 3-ring binders, and I joke and say, by the time I looked and researched everything, the next model came out. So now I've learned to be able to do that same research, but a little bit quicker. And I've been able to share that with clients that when they come in, if they have questions or a new prospect comes in and they're confused about when they leave, they're thankful. They do. They really are like, wow, this has been different than anything I've experienced. I've gone to other events, I've met with this one, but you're really right down to earth and you're really being clear on things. And I'm going to pat myself on the back for that. I have a good way of explaining complicated situations in an easy way without leaving things out.
Yeah, that's super important. It really is. Well, I think you nailed all the finance stuff. This would be a good, really good interview for people to watch too.
Good.
That need a little bit. I need to remember what he told me. Let's talk about your professional life living here.
Oh, yeah.
In Roseville. We are off Eureka, big, I guess you would say business district. A lot of offices here, and now you're rooted here. Are there any perks or challenges that you have of building your practice here in the community? 25,000 people have been to your event. So
right. I came into town. You might tell from the accent, I'm not originally from California. I'm more closer to Boston. Being in New Hampshire, spent a lot of time in Boston. I still have a little accent I hear. It was a lot worse, but
you don't say wicked.
Wicked, the cars in the garage. Hey,
and the bubbler is the water fountain.
Bubbler, yeah.
I used to live in Boston.
A few different.
I could not understand people sometimes.
When I go back to visit, I'm like, oh my word, I used to sound like that, So, but being a big Red Sox fan, I love going to Boston. But the fact is, living here, I love the weather. Right? It's beautiful. Yeah, we get hot days like everybody else, but all in all, we definitely don't get snow. But the area is a beautiful area. We have some good companies in the area, some hospitals, some major, incredible healthcare professionals. Nurses are incredible around here. But we have some big companies. And what's happening, we're in California. Here's the pros and cons. We're losing people in California. People are saying, we're out of here. I mean, I hate to say it, we're the highest tax state in the country. We need some change here. We're paying way too much in taxes, We get a break on the federal level with a new administration, but we get nothing from California. It's always, and now we have, and listen, I don't want to be political, but we have a lot of people here collecting money that never put in, and the people that did put in are being shortchanged, and I don't like that. And I'm big into veterans, so I love veterans, and I just don't think they're being taken care of as well. So people are leaving California, but interestingly enough, in our area, we've been having growth. People are leaving the most expensive areas like San Francisco, the LA area, and they're coming here in droves. And what I see a lot in California is a big diversity of people, from all over the world. And I love that because I love talking to them. I love learning. I'm an avid reader. I read all the time. I did it in college. I told the professors, few of them, I'm not going to come to class. I'll just read this. That's all you're going to do. I'll do the assignments. I'll come in. And they let me, and I passed, and that's all I do. Every book you read, you will know more about that subject than somebody that didn't read the book. So I read all the time. I'll have 2 or 3 books going at any time.
Same here.
And so you too. It's a wonderful way to learn and experience. So learning from people that come here, different countries, I love that. So there's so much good to California. I do wish we did have some change, a little bit more balance than, it's a very Democratic state, ran by the governor's Democrat. Most of the legislators are Democrat. And what I see is when the governor says, do this, they all, yep, okay, rubber stamp it. I'd love to have some conversation, some back and forth. People get upset about all the rhetoric, politicians and whatnot. Listen, I was born in Frankfurt, Germany. You see some of the European members of their Congress and Senate, because they get in fist fights, It's a passionate thing. And if you have passion, you care. Now, don't get physical. You don't need to insult somebody, but you can say, I don't like your policy. I don't like this. I don't like that. It's a conversation. I love talking to people that feel different than me because I learn stuff. And at the end of the day, isn't that what we want? So we're all balanced and we're all looking out for everybody.
Right. And so we don't need division any more than we already have.
I think so. Yeah. And we have such great people in the United States, great people coming to America too. We just need to embrace it and just all work together. It's just going to be tough.
It is. Yeah. And you're right. Placer County is a destination. So when you look at national numbers in the market, this area is excluded. I mean, it definitely kind of follows it. Like they're currently, as of today, there's a lot of inventory, and buyers are just scared because they don't know what's happening. But overall, it is a destination, and people are coming here because it's more affordable.
Yeah, and I'm not a realtor like yourself, but I watch it pretty close, and I've seen a little bit of drop in certain areas. In this area, it's still holding strong. A neighbor of mine just recently sold their house, and I was like, wow. Just reading where they're saying, this is going down, this is going down. It's still holding up pretty good here. And I think maybe it's with the influx of people coming here. There's some good companies that are paying people really decent
and Sierra
too.
College is always growing.
Yeah. So, and I think, being in the area we're in with this kind of growth, I mean, again, I'm not the realtor, but I feel comfortable buying something today and feeling, I'm not going to turn it in a year, but in some time, I'm making a really good opportunity for myself and my family.
Yeah. Well, do you think we covered everything?
Yes.
We're good?
I think we're good. I'm
good.
Really
appreciate your
time.
Hey,
you're welcome anytime. Or if anybody wants to talk to me, you can reach out to me, and we would love to see if we can be of service to you.
Yeah, or reach out to me, and I'll hook you up with Doug.
Exactly.
And again, I'm Lori McIntosh, and I'm a realtor here in Placer County.